for from the Reserve Bank. Well, unfortunately, it hasn't taken that. Joining us now to discuss the implications, Saumitra Chaudhari, member of the Prime Minister's Economic Advisory Council, and Sajjid Chinoy of JPMorgan. Gentlemen, appreciate you joining us here on India Business Hour. Saumitra Chaudhari, let me start by asking you about the kind of comments we've seen coming in from the government. The Finance Minister has made it very clear he's not particularly happy with the fact that it's been another status quo policy in terms of the repo rate. Similar sentiment being echoed by Monteng Singh Ahluwalia, the Secretary of the Department of Economic Affairs, Arvind Mayram. How would you read those statements coming in from North Block?
I think, what should I say, that today's situation, if you look at monetary policy in today's context, there are two quite legitimate points of view. One point of view is that the economy has been slowing and has shown alarming signs of slowing in the last 2 quarters. Demand is indeed weak, and even if inflation is elevated, because demand is weak, inflationary momentum is not there that much, and there is room for easing monetary policy through a rate cut. There's an alternative view that the headline inflation, even as of today, is quite strong. That the momentum, if you look at near-term momentum, the last 3 months, near-term momentum is also still strong. And at this point in time, to actually cut rates may be unwise, but we could do something about relaxing the monetary policy a bit, and that's where the CRR cut has come in. After the CRR cuts, is also easing the monetary policy.
Saumitra Chaudhari, we know both sides of the debate, but I'm asking you, which side do you belong to? Which camp do you belong to? Do you believe, as North Block is suggesting, that the time was right for a rate cut, that a rate cut at this point in time would have spurred a virtuous growth cycle, or do you believe that North Block is being unfair?
Well, I'm in the middle in most of these arguments. So if you want a positional reference, that I'm in the middle of all this, and I don't think it's appropriate for me to either say one side is right. I think both sides have a point to make, and then after 3 months down the road, I think when you look back and say in this October, how important was the decision to maybe defer this whole rate cut business by a quarter or so? How important was it? Do not assign it that much importance.
Sajjid Chinoy, I'm going to ask you to not play in the middle, as Saumitra Chaudhari has just done, saying that both the Finance Ministry and the Reserve Bank have equally strong arguments on whether or not they ought to have moved on rates. But I want to ask you, do you believe it is unreasonable, as I was just asking Saumitra Chaudhari, for the Finance Ministry to have expected the Reserve Bank to move on rates, given the fact that inflation is expected to go above 8%?
Listen, this is a tricky balancing act. I mean, the Finance Ministry has, to its credit, moved quite dramatically over the last month or so. It's demonstrated an intent that it plans to continue this sort of momentum going forward, and it believes very firmly that sentiment is a big part of the investment slowdown, and the central bank must do its part to boost sentiment. But that said, Shireen, inflation right now is just uncomfortably high. Retail inflation is running at 10%. The momentum of core inflation is running at 8%. We have a current account deficit at 4% of GDP. So it's entirely understandable why the RBI would want to be very cautious in easing monetary policy. So I think this is a fine balancing act, and I agree that both sides have legitimate arguments at this point in time.
All right, a fine balancing act. But Saumitra Chaudhari, how should we read the commentary from the Reserve Bank in terms of future action? Subbarao making it very clear that at least until January, perhaps January end, don't expect a rate cut. The government seems to believe, and we heard that from Arvind Mayram, the Secretary of the Department of Economic Affairs, that they believe that a rate cut before January is possible. How would you read that?
Well, January is the next quarterly review, so basically you sort of talking about January, there's a potential for making a change in the interim. And if you put it like this, I'll say the RBI is certainly assigning a much greater weightage to headline inflation on a year-to-date basis. And if, for instance, inflation numbers turn out to be more favorable in intervening months, it may be encouraged to take a mid-quarter view. But it's basically saying I'll take a view in January.
Sajjid, that is the question. What happens in the 4th quarter? The governor very clearly saying that if it seems like inflation is coming down, we will take some appropriate action. How much would you actually expect by way of a rate cut come the end of January? What is the sense that you're getting?
I guess a lot of financial market participants expected a cut today because tactically today was a good opportunity. Here's the predicament the RBI faces in the next quarter. We know inflation is going to rise above 8% over the next few months. So when the RBI meets in the last week of January, what it will have on its table is the December inflation print, which will likely be somewhere between 8 and 8.5%. And given its repeated emphasis that monetary policy has to focus primarily on inflation and inflation expectations today, it then becomes harder for the RBI to justify a rate cut in January when inflation is even higher than it is at these levels. So my sense is you might actually have to wait for any rate action to happen in March when there is a greater belief that inflation is on its way down, and secondly that many of these government actions have begun to affect things on the ground.
The governor is saying perhaps Q4. The government is saying as early as this year. Sajjid Chinoy, you're saying perhaps in March. But Saumitra Chaudhari, the finance minister yesterday sending a signal to the Reserve Bank when he unveiled that fiscal consolidation roadmap. The governor acknowledging today that the intent of the government is clear, but also saying that a lot more needs to be done by way of implementation. How do you read the move as far as fiscal consolidation is concerned? Because once again, we're short on the specifics, the how we're going to be able to arrive at that 5.3% number.
Well, there are some specifics which have happened. The specifics about what is yet to happen is what is not there on the table. But if you sort of look at the Kilkar Committee report and Kilkar Committee's guideline, which the Finance Minister just recently reiterated as an appropriate kind of a guideline, then there clearly has to be more that is required, not just in this year, but in the next year as well. So fiscal consolidation, yes, I think very important steps have been taken, but some more has to happen, and that's what there's obvious statement that the Reserve Bank of India also said. Part of the reasons why he said this also, because if you look at his previous statements the last 1.5 years, the RBI has been consistently saying that we can't deal with this all by the monetary policy. You need fiscal policy to kick in. So obviously you have to acknowledge the fact the fisc had moved, but obviously the fisc has to move a bit more. That's obvious. Otherwise Kilkar Committee would not have been appointed. The Finance Minister would not have been saying the Kilkar Committee recommendations are this. Right. So there's argument to it, but at the end of the day the proof of the pudding is in the eating. We need to see it.
Right, Sajjid, so given what we have heard from the Reserve Bank today, what we heard from the Finance Minister yesterday on the fiscal consolidation roadmap, are you willing to change your mind on the fiscal deficit number? Do you believe the 5.3% number, because the street continues to maintain anywhere between 5.7 and 5.9?
If the finance minister is going to 4 months before the end of the financial year draw a line in the sand and say it's 5.3, I'm willing to admit it will be very close to 5.3. But here's my worry, that if we achieve the 5.3 by pushing plan expenditures, pushing capital expenditures into next year, if we do it by running arrears in certain areas of subsidies, and if we do it primarily through asset sales and not so much through tax revenues, then I worry that this is not true fiscal consolidation. This is not true withdrawal of fiscal stimulus from the economy, and therefore may not help bring inflation pressures down. But let's give credit where it belongs. They have said that that's the number they'll achieve, and I think more importantly they stick to consolidation next year. The concern was next year is an election year, and the deficit may go awry. So if you can get to 5.3 this year and get to 4.8 next year, that will bring a lot of relief to the central bank, I think.
All right, Sajjid Chinoy, Saumitra Chaudhari. Saumitra playing in the middle, Sajjid saying it's a tough balancing act. Gentlemen, let's see what happens now in the fourth quarter. But appreciate you joining us here on India Business Hour with your thoughts tonight. Up next on India Business Hour.